Hey there traders, welcome back for episode number 76 from the StockBandit.tv. I'm always glad that you made it, and I hope that your weekend has been a good one. And hopefully with that free time that you got this weekend, you were able to spend some chunk of it looking through a lot of charts and getting prepared for the trading week ahead. Now that's what I've been doing, and of course we're going to take a look here in this episode at the major averages. I always like to look at the beginning of my analysis at what does the big picture look like? And then, of course, from there I drill down into the individual stocks that I'm looking to trade. But in this free video, all I'm going to cover is the major averages. So we're going to take a look at the S&P 500 and the NASDAQ and the Dow. And, of course, along with that, that's where most individual stocks will find their influence for direction or lack of direction, whichever it may end up being. So without further delay, let's get going. Up first is the NASDAQ. And as you see, we recently cleared the 1785 level. That was an important former resistance level and short-term resistance level that we finally got over the hump of recently. And that was 2 weeks ago. Since then, the upside has been there, but it's been extremely minor. We have a very distinct lack of momentum here in that we are continuing higher. You know, the uptrend which started right here in March is still in effect, and this is continuation that we're seeing, but there is no momentum, meaning the bulls are not just taking off and sprinting. They're not running this market higher. And so with that, you know, it's important to maintain some awareness of the overall uptrend that's still in place, and yet carefully walk that line between momentum and, you know, just patience. And so this market has required some patience lately, not only during this phase right here where we were channeling, but even since then, because we almost have another channel here taking place that's just slightly tilted to the upside. So for now, the next important resistance level is right up here at 1950, and you know, of course, support would be down here at the 1785 level. So we're kind of caught about in the middle of that range right now. The short-term trend is up. The intermediate trend is up from the March low. But in the very near term, not a ton of momentum there. So keep an eye on those two levels. For the S&P 500, the important zone was 943. That was this January high. And, of course, we ran up and challenged it a couple weeks ago. Finally cleared it. But since then, almost every day we've tagged that level. We're still clinging to that same 943 area. In fact, on Friday of last week, we finished at 946 and change. So we're only 3 points away here, which is not much of a big deal. And yet, at the same time, we've been below average volume here for that entire stretch. This gold moving average right here is a 21-day moving average. This is about the 1 month average. And you'll see, even if I zoom in here, look at all these days that we've been below average volume. So clearly not a whole lot of action out there. And, you know, such is the case here early on in the summer. But I do expect once people start returning from their initial vacations here, and hopefully we'll either get some news or something to get us out of this very short-term kind of choppy trading range. And once we do, if we can clear the 956 level to the upside, that of course last week's high, and that's the current recovery high from this March low. If we can clear 956, then the next spot would be right up here at 1007. That's the November high from last year. So those are the levels I'm keeping an eye on for the S&P. But again, most notable will be volume down here. And for the Dow, after clearing the 8600 area, which it touched a few times, this index has done a great job of holding above that, but it's also stopping shy of this 8950 zone, which has been some resistance in the past. That's, of course, the next level on the upside, not too far away, 150 points for the Dow, which is certainly doable in a day or less. But for now, after clearing 8600, the upside has been extremely minor and very gradual. So we're seeing a lot of minor net changes on a day-to-day basis in the Dow. And of course, again, that's likely attributable to not only the volume here, but also the lack of momentum in the NASDAQ and S&P as well. So those are some important levels to keep on your radar this week as you keep an eye on the major averages. Always got to keep those close by. And then, of course, follow your trading plan beyond that. Thanks again for joining me for this episode. I will be back soon with more videos, but in the meantime, trade like a bandit.